Okay, hello everyone. Good evening, morning, afternoon from wherever in the world you are joining from. It's Muhammad Ishan here, joining you from Dubai, UAE. First of all, we warmly welcome you to this exciting webinar on next generation finance, that is finance transformation and data analytics. It is hosted by Hub of Finance Transformation, HOF, and it's going to be produced by our training and strategic partner, CFO University, Finance Analytics Institute, as well as our technology partner, Aurora Predictions. So first of all, we are highly thankful to all of you for joining this webinar today. And before moving on, just I would like to quickly tell you about the logistics of this webinar. It's going to be almost 1 hour and 15 minutes webinar. And we are having a lineup of 3 speakers, as you can see on your screen. So we are dividing this webinar into 3 different sessions today, and we will take a pause after each session. So if you have any question relating to the speaker's presentations or session, you can just drop your question in the Q&A box, and we will try to address as maximum questions as possible during the Q&A session. If you face any technical difficulty during the webinar, you can just send your message in the chat box as well. But just for the Q&A, please use the Q&A box so that we can gather all the questions and address them during the session. And if you want to have a certificate of attendance also, you can send us the request and we will be glad to issue the certificate of attendance for any CP credit purpose if you want. And you have to participate in all the polls also that will be conducted during the session. So as you all know that HOF Global is the host and organizer of this webinar. And we are basically in the business of transformation. We are transforming the finance carriers, finance professionals, as well as the finance function from the backend service provider to a more strategic enabling function. So our main aim and vision is to empower the global community of finance professionals to play more business-centric roles at the forefront, to add tremendous amount of value to their employers, to their businesses, as well as their own life. So for further details, I would not like to go on further details here. You can just visit our website, hof-global.com. And also you can follow us on LinkedIn and HOF Global to know about our upcoming events, brands, and programs and initiatives that we are taking for the global to support the global community of finance professionals. Just I would like to give you a quick background of introduction and background of our speakers. We have a tremendous panel of speakers today who have already joined us from USA. Mr. Jesper Sorensen, he is the Senior Finance Director in one of the Fortune 100 company based in USA. He's also the founder of Finance Analytics Institute. He has more than 2 decades of experience in the field of finance transformation and analytics. Mr. Robert, he's also joining us from USA, and he's the Managing Director of Aurora Prediction, one of the technology firm who is involved in machine learning, artificial intelligence based analytics, and lots of new digital technologies in the field of finance and accounting. And apart from this, we have Steve Roswell as well, who is the founder and chief learning officer of CFO University based in USA. So we have a tremendous panel of speakers today who are going to share their experience on finance transformation, data analytics, as well as on the emerging technology. And apart from this, we have 2 moderators, myself, including Mohammad Dishan. I am also the head of FP&A and finance transformation in the ICT sector based in Dubai. And we have also another moderator, Mr. Mohammad Al-Rubi, who is also FP&A and FBP expert in a global pharmaceutical firm based in Dubai. So we both are the partners in the Hub of Finance Transformation, and we are the one hosting this webinar with our strategic partners. So this is the agenda for today's webinar. As you can see on your screen, we will be sharing the findings on the future of finance from some globally renowned firms. And then we will talk about the finance transformation, its challenges, finance business partnering, leveraging data analytics in finance, and as well as some digital technologies during our 3 speaker session in today's webinar. So this is some interesting survey and research done by one of the globally renowned firm, that is Gartner. And as you can see on your screen, this is the growth in the jobs posted by non-technology companies in top 10 countries by GDP. So these are the jobs that are not only posted in the IT functions, but also outside the IT function. That includes not only the finance function, but also it could be the sales, marketing, operation. So here we have to pay attention that when we talk about outside finance, it's not only necessarily about the finance function. It can be about the operation, sales, IT. So being the finance professional, we have to take the ownership and initiative to upskill ourselves, to upskill our team. Because if the finance will not upskill their team, or reskill their team members, or the finance leader, even they don't have the right mindset of strategic business partner or finance business partnering approach, so they will be left behind. Because if the operations or the IT, they will be leveraging all these technologies and analytics, then all the strategic and business related tasks and analysis will be taken over by them. For example, the monthly closing. Now, with the use of emerging technology, like as it's mentioned, robotic process automation, artificial intelligence, even the IT can do the monthly closing using these technologies. So where will our finance function fits? As well as one of the big four firm, KPMG, highlighted in their latest research that the finance not upskill themselves, it might be not in a position to play a more strategic role, and they will be limited to just some areas of expertise, certain specialized areas like IFRS or taxation or compliance rule. So this is our responsibility, and we have to take the ownership, initiative, and responsibility to shape the future of finance from the back-end service provider to a more strategic enabling role. And for that, of course, we have to upskill and right skill our talent, our team, our organizations. As you can see, there are lots of demand, growing number of jobs in data science, data analytics, RPA, and robotic process automation. That, of course, our speakers today are going to talk about it. Then this is some of the latest trends, as also highlighted by Gartner. As you can see on your screen, the digital, about the finance analytics, about demand for decision-ready data, and data analytics, of course, it's going to play a major role. So not only the financial data, but also the operational and other non-finance data that finance has to leverage to support the businesses in their operational and strategic decision-making process. So all these top trends, the CFO and the finance leader should keep in mind for the strategic planning for the 2021, and of course for the years to come. So all of these trends we are going to discuss in today's webinar with our speakers. And as we all know that World Economic Forum has issued his latest report, just I think in the month of October. And as you can see, one of the growing jobs are artificial intelligence, machine learning, and big data. These are the growing jobs in demand. Even after this outbreak of COVID-19 pandemic, it is much higher level of demand for these type of professionals. And at the same time, you can see that jobs which are going to be demolished or in the upcoming years, like accounting, auditing, and traditional bookkeeping jobs. So these are jobs are not going to be, obviously the functions are not going to be vanished completely, but the robots or the machines or the emerging technologies, so obviously they are going to take over all these tasks. So it is the time that we have to upskill ourselves and upskill or right skill our team, our talent, in order to remain the relevant and to play more business centric roles. And this is when we talk about the transformation, as we are today also, we are going to talk about finance transformation. So this is the typical transformation downward spiral that you can see on your screen. Because when we talk about transformation, most of the companies, they start with just hiring the consultant, and their focus is on the efficiencies, on saving the cost or finance cost as a target of sales. And they focus on the process improvement, they focus on more on the process side and on the system side. But there are two very important pillars or enablers of finance transformation. That's the mindset and the people. They neglect to define the talent development. They lost all the focus on the people and the mindset side. And there are lots of failures. According to Gartner, 70% of the finance transformation projects fails because of this reason, because they don't focus on the mindset and the people. If they invest heavily on the systems and processes, but if the mindset of the people are still the old, if they don't have the right mindset, if they don't have strategic or business partnering mindset, that system will not fail. They will not work, and ultimately it fails, right? So that's why, as you can see, the outcome is the cost. It obviously it strips back to the business partners, and they are unsatisfied because they not see any value. They don't see any value, new additional value generated from that transformation. So at Hoft, we have always been emphasizing on using this principle, that is the Thrive Finance Transformation Principle. As you can see, is the acronym used for this principle, including transformation, holistic, response, innovation, value, and enterprise. So whenever what type of transformation project you are taking on, you can follow these principles to really thrive in your finance transformation. So first of all, starting from the transformation, so you have to first of all differentiate between the transformation and the change, because just improving some systems and processes, that not comes under the definition of transformation. Transformation means you are completely redefining or reimagining the future of your finance function, as well as for the entire organization. Then holistic means you have to, when you're talking about the finance transformation, you have to take a very broader picture. You have to take a big picture view, not only the finance function. You have to keep in mind the entire business, the entire outside factors or outside competitor factors that are prevailing in your industry. Then your response should be very strategic. It should not be only some process improvement. It should have a strategic response, and then it should, at the same time, it should be innovative, because it's not only just about implementing some technology, but it's also about innovating the business model, so that finance can rethink the traditional processes. They can modernize their infrastructure and move toward more collaborative business models. So that's about the innovation. Then value, of course, as I talked about before, what additional value you can bring to the organization through the finance transformation. Is it only the cost saving or efficiencies, or you have to become a profit center for the organization and create tremendous amount of value for the business? Then enterprise, as well as you have to obviously you cannot do any finance transformation in the silos or within the finance function. You have to consider the entire organization. You have to first understand the needs of your business stakeholders, the non-finance business partners, your operations, your sales, your marketing. What are their requirements? What are their key business priorities? What are the KPIs that they are looking for? And what are the key high value activities that they want the finance function to focus on? So you have to focus on all these 6 principles for a successful finance transformation. So not only survive, but also to thrive. So now, without any further ado, I would just like to hand over the session to our very first speaker, Mr. Steve Roswell, who has already joined us. Steve, can you take from here now?
I sure can, Zishan. What a great introduction! Holy smokes, you packed a lot into that first 8 minutes. That was really something. So thank you for that. And what I want to talk about is the challenges that companies are having and finance leaders are having in finance transformation. So if you think of transformation as a dramatic change in form, how does that apply to finance transformation? Well, let's use a definition of a dramatic change in the value creation capabilities of our finance operations. So let's think of that as dramatic. So that's what we're talking about when we use the words transformation. And you saw from Zishan's presentation how important it is for us to remain at the side of our other business partners. What I want to do is talk about transformation in 10 different challenges that we face. And the first of those challenges is leadership. And I'll use examples as I go through this to help you understand maybe how a CFO or a finance leader has tackled some of these challenges. So in this case, we'll talk about leadership in terms of the first CFO that I worked under. He put people first. So you think about leadership, it's putting people first. And the CFO, where I started my career, had treasurers in 60 countries. So it's a global trading company. Their skills were learning, what he recognized that their skills were very much related to more than internal operations. So it wasn't just funding and cash management that they could do. They were actually learning about the capital markets. So he was able to transform the treasury operations for this big global company into a very profitable global capital markets trading business that created significant value for the company. So leadership, recognizing the skills in people and how to make their lives better and helping the company along the way. The second area, the second challenge is mindset. And I look at mindset kind of in 2 ways. One is there's a present prepared, and the second is future focused. And the present prepared has to do with building a foundation and then develop the decision-making structures on top of that foundation. So it's both. It's not just forward looking, it's also creating a good platform to build that foundation on. I'll use an example of a coaching client in Central California. We coached him on how to build a strong finance foundation, which he did. So his financials came out on time, they were worthwhile, his processes improved, he didn't have any problems in capitalization. So figured out all those foundational items, and now he's developing the infrastructure that will support the tools to transform his finance function. The next area, the next challenge is a journey, and I look at this more as a communication issue. We have to be able to communicate where the journey, the transformation journey is leading to. Not necessarily what the destination is, but at least what the destination looks like. Here I have an example of a coaching client of a mature family-owned business in Italy. She had to lay out all the benefits and steps required to bring her finance operation into the 21st century. Her old school owners were more comfortable with the ways of the past. So she had to make sure she took the time and invested in helping the owners understand what the destination looked like. And once she was able to do that, she was able to begin her transformation journey. The fourth challenge is ownership. And what does ownership create? Ownership creates pride, right? So another coaching client, another happening in California again, didn't believe that her finance operation was creating much value. She didn't feel she controlled her destiny. Shipping documents contained significant errors. Orders weren't entered on time, and expense reports were always provided late. So what we taught her is that she does have control through the framework, the CFO framework of accounting being an internal control governance part, foundational aspects. She was able to take control of her kind of plight at her company, fix some of those issues that were creating her foundational problems, and created a learning tool that she's now on her transformation journey. The fifth one's a fun one, and one that we'll focus on a lot in this course, is data analytics, or deriving insight from data. The finance team, so the example I'll use here is a finance team from an old commodity company that I worked with, put together a regression analysis on 35 key inputs that we believe really impacted the prices of commodities in a specific location. And we used things like freight costs, crop size, location, moisture content of the product, all 35 different variables that we thought were important. And through this rigorous data analytics, the finance team created a tool that our trading staff used to supplement the heuristic trading models they had developed. And this was a wonderful example of finance transformation getting much easier when we can show a few successes. The next area is alignment. So if business goals and finance goals don't align, we've got a problem. So they must align. I was named the CFO at a commodity handling business where finance was looked on as just as an auditor, not a business partner. Once we aligned our goals with the goals of the business, i.e. helping the company make money, the finance transformation process was able to start. The seventh one is really important. It's language. If you don't talk the language of your stakeholders, transformation will turn into stagnation. I spent part of my career in the commodity and financial trading industries. On the commercial side of the business, the term debits and credits were replaced with long and short. The word basis had nothing to do with tax. It had everything to do with price relationships. The statement of financial position was the P&L. Finance transformation cannot take place in a vacuum. Speaking the commercial language of your business rather than the finance in finance terms is transformative. Insight times influence equals impact. I have to give credit to my friend and CFO University contributor Anders Lou Lindberg for uncovering this challenge, and I really like it. And an example I have is a coaching client right here in Vancouver, Washington, created tremendous influence by building a super solid foundation. When COVID hit, his deep insight into the business allowed him to formulate a plan that significantly reduced his fast-growing company's cash burn. His impact has given him a wide berth with his CEO and board to further transform his operation. The next challenge is conviction. Recently, I was invited to an event with the CFO from Lyft, the rideshare company here in the States. At the event, Brian was asked how the decline in rideshare use from COVID-19 was handled at Lyft. He responded by sharing the long-term advantages of rideshare, immediately noted that their data analytics indicate they have just scratched the surface of the potential of their supply-driven business model. He then described the steps they have taken to cut costs, the variable they currently have the most control over. Even with a 30% decline in rideshare trips versus when they first made the projection, they still expect to break even on an adjusted EBITDA basis at the same period they forecast prior to COVID. His conviction about the business model, reliance on data-driven decisions, have given him a big step in transforming finance at Lyft. Finally, confidence. We all need confidence. And when you conquer the 9 challenges above, you'll have the confidence to tackle your finance transformation. So that I gave you 10 challenges. What I'd like to do as we start our Q&A is in the chat box, put which one of those do you feel is your biggest challenge at your company or within your position? So just put that in the chat box, and then we can start taking questions if you have any questions on what challenges you're facing when it comes to finance transformation. So looking at the leadership, ownership, mindset, leadership and mindset. Yeah, I think the leadership aspect is really important, and it comes in two ways. One is, as the leader, if you're the CFO or a finance director implementing this change, there's a leadership role. But individually, we all have a leadership role to take as well. And that's supporting where the change and the mindset and all these 10 factors that give us challenges, being able to support those, even as individual contributors, is really important. Mastering data analytics, well, that plays right into today's panel discussion. Conviction, I think that's really important. And it was really interesting to hear Brian talk about that, because he believed in their business model so much. And their business model is built around data analytics, knowing where, knowing how to move people from one place to another in a big city very efficiently. That's what their model is. And his data analytics are a huge part of that. So his conviction on their model is really important. I see that there's digital tech investment, and it's hard for CFOs that are starting on this journey. And this is where I think the communication part comes in, is what does that destination look like? And that will always be moving. There'll never be a destination that stays still. But at least if you have that target, you can shape what it looks like for people. And that way you can get the capital and the resources you need to be able to, invest in the digital technologies you need. I agree, alignment. So Avanish, alignment is important, and you run into it all the time. If finance doesn't feel it's part of the commercial business, that they're out there to help the commercial business, if they're there to be auditors and cops, and granted, we have huge responsibilities in those areas, protecting the company's assets. That's one of our jobs. But we also have to know those assets need to make money, and we need to help our commercial managers in that role. So I think alignment is really important, that we're aligned with the goals of the company, and that means having a commercial hat on. If anybody has any other questions, what we can do is we can move on to the next section, which has to do with business partnering. But I'm happy to take any questions on the challenges and what you're facing, and how you can get over some of those challenges, after the webinar later on. But just put your questions in the chat box, or the Q&A side, and we'll end up responding to you later. Right now, what we'll do is we'll go to the next section of our webinar, and that has to do with business partnering. And so I'll start out, if I can, with any luck. You're all seeing my screen again. And so we'll talk about business partnering from a couple different terms. It'll be real exciting when I hand it over to Jesper, because he's got kind of a new business partnering role that he'll describe that I think is real exciting. What I'll take you through is the finance transformation and how business partnering, that role has changed over the last, well, I'll call it the 40 years, but it might, give or take 100 years. So let's talk about the evolution of the business partner in finance. I'd like to take a look at this from the vantage point of the CFO. That's my background. So when I look at kind of the CFO and their responsibilities, 40 years ago, the CFO was made up of two, key technical pillars, the accounting pillar and the treasury pillar. Let's review the two technical pillars quickly. On the accounting side, governance and controls a really important part about that function. So think about the audit side, think about, your general counsel. We're all part of that accounting side. Governance and controls, protecting the company's assets. Transaction recording, so making sure transactions got recorded on time properly, which then led to proper reporting. So proper reporting, the financial statements, the tax statements, very, very important, very, very critical, and very foundational. On the other pillar, we have Treasury. So what's Treasury doing? But Treasury is managing cash, making sure we're liquid, we're not running out of money. Treasury also, if we want third-party money, so we're growing quickly, you want to go to a bank or another equity partner, Treasury handled the fundraising side of the business. So cash management and fundraising were two really important roles. And once we took on third-party money, risk management became very important. So all of a sudden, we have other people that we're accountable to, not just the owners of the company. So risk management. So think about these two pillars, accounting and treasury, as kind of the core part, combined with leadership for the CFO role. And that was about 40 years ago. And at the time, and the transition that occurred, and I'll go through it real quickly. So what happened over the last 40 years is this finance role, this business partner role, that really came about because the planning process became more sophisticated. So a controller and a treasurer couldn't get together and do the planning process for the commercial folks anymore. They had their own jobs that were big enough in just making sure their financial reports were right and making sure that the controls were in place, making sure they had enough money. So this idea, this finance business partner, this finance role, FP&A role, call it, came about to do business planning, and as a carry on to that, forecasting. So now we're looking ahead. We're looking in the future, making sure our plans are being met, or if they're not being met, why, what action do we take? So the forecasting piece helps us calibrate how the plans are working. And then finally, the exciting area, data analytics and investment analysis, has come about more recently in ways that we can take large sets of data and sift through them and find insight. And so those areas, the accounting and treasurers never were able to handle that, or they were able to handle it, but it got so big that we had to have this role that's really a future-looking role that I think certainly in Europe and I think in the Middle East it's a finance business partner role. We call it here more of an FP&A role, but it's very forward-looking. So where the control function and treasury functions are more real-time or historical, this role becomes more future-focused looking. So let's see. I had some exciting news for you. So this is just a more exciting news. We're going to bring Jesper Sorensen on, and Jesper is going to talk about what is really a new business partner role that's enabling finance transformation. Jesper?
Steve, there are a couple of questions relating to your session. I think we can address those.
Okay.
One is if the finance function consider themselves as advisors through a business, then how they can lead a finance transformation in the business?
And that actually, makes perfect sense, right? I mean, if they're from the advisory standpoint, and I look at the advisor as somebody who's got a deep knowledge on subject matter. Now, they may be internal or they may be external, but you're bringing an advisor in to give you deep expertise on a particular challenge that you have. So they're perfectly fit to kind of lead that piece of what has to get done. I think maybe where the challenge gets in when the lead comes into how do we get the capital, the human resource, the money. And that's where we need the support and that whole journey and communication we talked about, getting the owners on board, getting the CEO on board, getting the board on board. They have to help you lead that process. So as advisors, I think we're perfectly situated to, we're the experts in it. So from that standpoint, we're the perfect people to implement it and move it forward. The leadership part comes in maybe getting adoption by senior executives to take those positions.
Okay, and there is one more question, Steve. Business is more keen to invest in customer-facing investment versus data analytics or digital investment for finance. So how can we articulate the ROI, return on investment, for digital investment for finance?
That's a great question. One of the easy ways to do that is focus our digital efforts on customer-facing items, which is happening more and more. I mean, data analytics is becoming a great way to mine customer data, and the finance teams have all those capabilities, the analytical capabilities, the ability to bring insight from a lot of information. So I think in many ways, if you marry the customer improvement side of things that commercial managers are looking for with our ability to take data, I think you can marry those two. But from a more fundamental side, I think we're able to insight. Our big role is being able to communicate. So having the communication skills, we can get the insight, but if we can't communicate it, and this is where that insight times influence equals impact comes in. We've got to be able to influence people. So I think maybe what we're talking about here is a really important part of the communication side and how we build our communication skills to be able to, show people and express to people the value in the data analytics that we're working on, whether it's customer driven or cost driven or whatever that might be.
Yeah, I think that's very right, as Steve mentioned, because data analytics, it's not only about the finance, it's also about the customers as well, like customer analytics or marketing analytics. So of course, we can articulate the ROI for investing in analytics. So it's not only for finance, it's also for the operational area, for the strategic focus as well, correctly mentioned, Steve.
Yeah.
I think, yeah. So we can move on, I think, with Jasper and Mohammed Al Ruby. We can over the session to them, but no more questions I can see.
Great, thank you.
Okay, Jasper, over to you.
Steve, please stop sharing your screen, then I'll start to share. Okay, you should all be able to see my screen, I believe.
Yes.
Okay, so let me just take you through like an evolution of this partnering and what has happened to the partnering. Steve mentioned a little bit about it, but let's just go 30 years back, because a lot of things has happened in finance over the last 30 years. So if we go back 30 years, we were talking about this, what I call the record keeping account, and what Steve was talking about, the focus on bookkeeping, reporting, historical number to support the business. At that time, finance was really having the monopoly of providing information. That kind of changed as we move into the 2000. As we move into the 2000, we start that partnering. Now we're no longer the accountant. Now it's the partnering that is important. And I'm talking about this as a first generation partner. This is where the transformation project starts to be around making sure that we can talk that business language, making sure that we get out of our finance office and out in front and into the business. We're building those relationships. And by building the relationships, we have the ability to build that acumen around the business. And now we can start to contribute to decision. Now we're no longer that supporter, but we start to collaborate. So we start to contribute to some of the decisions. That is not just providing financial information, but it's also like we need to do an investment case. Okay, finance has been called in because there's an investment case here that we need to do, and we start to model. Still no analytics in this, but because we basically just model based on assumptions, stuff like that. So it's not that we're using analytics to do that. But that is kind of the 2000. Then when we get into the mid 2000, that is when this term that Steve was talking about, what I call the finance business partner, or FBP, what I call the second generation. And that's where some has moved in, I would say today, and a lot want to move in there. I'm going to give you the last one later, but when we're looking in the mid 2000s here and up to 2010, that's where the first transformation project starts to happen. A lot of companies in this time also start to move some of the finance groups into low-cost centers, because we want to free up time in this core team so that we can be that business partner who now start to influence. So that was one of the eyes, right? But we still don't provide a lot of insight here, but we try to influence, but we don't really influence with insight, but we influence with what is available for us. That is to be able to roll up a forecast and kind of having our gut feeling a lot of time that we don't really trust this, looking at the trends from the past and stuff like that. But there's really no detailed analytics and tough analytics in this. That's what we get right now. So when we move up to the 20s, this is when we get to the third party that I call the analytics business partner. Now we provide analytics insight, and predictions that will impact the strategy. So this is, now we're getting those two additional eyes in here, the insight, because if you don't provide the insight, like it's worth nothing, right? You might be able to influence on some decision, but if you don't provide that insight that the business will take and take data-driven decision from that, it's basically worth nothing. But if we can find that insight using big data analytics, using predictive analytics, using simulation, stuff like that, that is when we start to be able to impact decisions that will have a strategic impact on the organization as well. And I'll come back to some of that in our next session when we start moving into analytics and what is analytics and how do we advance our analytics. But this is basically the evolution that has happened here over 30 years. And right now, make sure that you follow this one. If you are far behind, if you're still sitting in the 2000s, make sure that you at least step into the 10s and then after that the 20s, because if you don't do that, there's a lot of other organizations who's coming and taking your position. You basically get sidelined because there's so many things. Mohammed mentioned that in the beginning, right? There's so many things that computers and new technology can do that where we don't necessarily need us anymore. But in order to get here, we need to build hard skills, but we also still need to focus on some of the soft skills. So if we think about the analytics business partner, what are some of those components? So we have 3 building blocks when we're talking about the analytics business partner. And one of them you're probably very familiar with. Like, what is finance doing today? Standard reporting, analysis. So what is standard reporting? Standard reporting is we're building the budget, we're doing our forecast, we are reporting actual numbers, and the analysis to that will often be a variance analysis. What is our actuals compared to budget, actuals compared to what we forecasted, and so on, or actually maybe compared to last year, looking at trends as well. That is really what belongs in this partnering role from a hard skill component. But it's also that communication that Steve talked about. Like, we want to make sure that we're clean, concise in our communication so that we can impact some of the decisions. And then that teamwork and collaboration that the finance business partner really start to implement around the 2010s. It's really important that you build that in, because that will give you a lot of that business acumen. Now you understand the business. Now your guidance and now your recommendations to the business will be much more business focused. And this is where the majority of finance functions are today. They're pretty good in this partnering skill set. We will look at that later. We have done some research. Finance Analytics Institute is both in training, but it's also a research institute. So we do a ton of research. So I'll show you something about this later on. But there's other components that we need to build, because just building these kind of things, we cannot really provide that insight and having that strategic impact. So we need to build another element here into it. That's what we call strategic leadership. That is the ability to think strategically. That's what our business is really good at. If you think about maybe some of the guys that you worked for, like, the reason why they are in those positions, because they can think in a strategic way, but we need to help them with our analytics insight to help them think in a strategic way from a data perspective as well. But it's also to act strategic. Like, we want to make sure that what we are doing is aligned to the strategy. If the stuff that we're doing, we could be a data scientist, right? We could have a data scientist hired into our teams, and they could do the most amazing analytics. But what about if it's not aligned to the strategy, so we can't act strategically? Then it's basically worth nothing. And that's one of the reasons why we, in the Finance Analytics Institute, when we talk about the future, we don't really talk about the future as we need to hire data scientists. We talk about the future as finance needs to hire the guys with the skill set. Then we will enable them with the training on the people dimension and the processes on the process dimension. And most important of all, the systems on that tool dimension, so that we can provide that insight. And Robert will talk about that later on, about some of those tools, because they need to be so intuitive that we can use them in finance, because I don't think that we're ever going to be data scientists in finance or hire them. I've tried it. I've been leading many, and today I'm leading a big global finance team, but hiring data scientists into that team is extremely difficult, because data scientists, they don't necessarily want to work in a finance organization. They want to be a consultant, or they want to help a business. and work indirect in a business. And another element that we often see, especially in the US, is that they cost significantly more than your finance analyst. So it's a little difficult to hire these guys. And then when we provide that insight, now we can start to influence those strategic decisions. And in order to do that, we need to have that thought leadership within strategy. And the thought leadership is really around those 4 components in order to build an analytics culture. So we use our people skills, our processes, our mindset, and our tools to be able to answer all the questions that the business might have. The business might have some very complex questions that when you look at your data, you'll say, I can't really solve that. But that's where that strategic thought leadership comes in. Like if you have the right people, if you have the right processes, if you have the right systems, and if you have the right mindset, then you can solve any issues that the business will come up with. But there's one more component, and that's one that we are often lacking. That's what our research will show, and I'll show that at the end. And that's around the Analytics Toolbox. And I hope that's the reason why you're here, because you want to learn about data analytics. So what is it? Like, data analytics is really about 2 components. There's the techniques, and then there's the systems. And you can't, if you have one and not the other, you can't make it. You need both of them. So take an example. You need to do some kind of predictive analytics. You have bought the most amazing systems, but you don't know how to do predictive analytics. Or maybe you don't even know that there's something called predictive analytics where you want to predict the future. So you want to make sure that you also understand those techniques, whether that is how we use correlation, cluster analysis, Monte Carlo simulation, predictive analytics, these kind of elements that is some of the hot topics right now that we're bringing up in the finance organization to provide that insight. If you don't understand those techniques, you can buy the most advanced systems, but you will still not be able to get there. So think about this, the building blocks to become that analytics business partner have those 3 components, and make sure that you have all of them, because if you don't have all of them, you can't get there. With only one of them, you'll not be able to master the analytics business partner. So that's kind of where we're ending with this session in business partnering. Mohammed, any questions that's come in?
Yeah, thank you, Jesper, for the very informative session. Actually, we have some questions. The first one is, how does the analytics business partners differ from the finance business partners that we always know?
Yeah, it's a good question. So the finance business partner, as I said, that is the top one here. When we look at this this overview, that's what we have in the top. The partnering skills, that's often where finance is today. Solid financial reporting, but it's standard. It's not forward-looking. And if it is forward-looking, then it's a forecast that is super biased because it's a roll-up from the business or roll-up from finance, or you have your bias put into that forecast, but it's not based on analytics. So the stuff that we are focused on as a finance business partner is really the top here: communication, teamwork, business acumen, and our standard stuff of providing the budget, the actuals, and our forecast. But there's no analytics in it.
Great, thank you, Jesper. And can you give us an example
of an analytics business partner?
Yeah.
So let me just, like, one of the examples that I have experienced personally was a business where the finance organization, when I came in and took that finance organization over, we were rolling up forecasts, and we just rolled it up from the business, and we could see that they were always way too aggressive in the forecast. Then how do we challenge them? We can challenge them based on our gut feeling, but gut feeling, nobody's going to buy that. We can challenge them of what I call single case examples. Basically, last quarter you were also over forecasting, or the quarter before you were also over forecasting, but there's still no analytics in it. There's still nothing that will really convince them that this is not correct. Then what we started to do is that we start to run predictive analytics to see if we were better with our predictive models to say what will happen in this quarter and the following quarters. And we quickly figured out that we could do that with predictive analytics. And with that, then what you do then you start to use those partnering skills, right? Because then I went to the EVP, so the executive vice president who are driving the business that I work for, And I said to him, I think that your business is over forecasting. He was kind of having the same feeling that his business was over forecasting. And I said, okay, I think that I can do this better. And then he said, okay, have you talked to the guy in sales who's running our sales department? So the VP of global sales. And I said, no, I haven't talked to him. He said, don't do it. Show this to me for another 2-3 quarters that your models are better than what he comes back with. And at the end, after 4 quarters, when we're sitting in our normal meetings, he turned to the VP of sales and asked him what his forecast was for the quarter. And he gave the number. And then he looked at me and said, what's your forecast? And I said my forecast, what it was, and they were significantly lower. And then he said, okay, the forecast we submitted to corporate is the finance forecast because that one is shown to be more accurate. That's a way to use analytics to influence decisions and really impact the future strategy. Because if you think that you can sell more than what you really can do, then you have an issue because you will end up not doing that. And then you like, if you can predict where you'll be in the future, then you can kind of set the strategy around that. So that could be one example, but there's a ton of them, right? Where you can do analytics that we don't necessarily do today in finance.
Brilliant. Thank you very much, Jesper. Sorry, another question is, what is the most important skill set to be a true analytics business partner?
Yeah, so I would say that it's all of these, but probably the one that you want to look into that you probably don't look into today or not that focused on is really about providing that insight. So how do we provide that insight that will influence the business decision and impact the strategic direction for the company? That is the one. So I would say where we weak, and we'll look at that later, as I said, in some of the research we've done, that's really around the analytics toolbox. So what is the most important? There's nothing that's more important than the others, but where we're lacking is around the analytics toolbox. And that's the reason why we're creating what we're creating here with this webinar and try to get some attention to this, because that is really where we need to go. And if we don't go there, I'll guarantee you there's so many functions out there, and you probably see that in your daily work as well, because you don't have the monopoly to the data anymore. So others will come in and steal your job. And if we don't jump in and take that role as being the guys providing the insight, somebody else will do it.
Awesome. I received another question from one of our participants, which is, will data science take over the FP&A role in the future, or they remain different functions?
It depends on data science. If you talk about machine learning, if you talk about artificial intelligence, it's not that it's going to take it over, but it will be elements that you'll be using to do your job. And Robert will talk much more about that, I'm sure, later on here. But it's really to embrace those new technologies, because if you don't do that, you'll get stuck in what I call the 80s or the 90s, in those tools that we had in the 80s and the 90s. And I'll talk about that when we talk about analytics. Those tools like Excel tools or like data visualization tool, these kind of things. We really need to think about the science here and build that into our business partnering approach. But don't become a data scientist, because the problem with the data scientist is the data scientist is extremely good if you look at these boxes at the bottom one. But the data scientist is not very good at the 2 top ones. So everything that they're providing, they don't necessarily have that connection to the business, understanding what is strategic important. And they don't necessarily have those capabilities around communication and understanding the business and collaborating with the business, stuff like that. So I would say data scientists and data science, yes, build it into your approach, but don't just focus on that, because then you're missing the 2 top ones here.
Awesome. Thank you very much, Jesper. I cannot see any more questions. So shall we move to the next part?
Yeah, let's do that. Okay, so now we're moving into data analytics. And then what is analytics? And if I asked everyone on the panel here, everyone will come up with a different definition, because there's really no unique definition for what is analytics. But the way that I look at it, and I take these 3 I's in, as I call it, into account once again. So data analytics, that's the science of analyzing raw data. So we have some kind of data, but we don't know what is going on in that data, but we need to analyze that data in order to provide that analytics insight that will influence the business decisions. And it will impact the strategic direction for the company. The important thing here is data analytics. We need to make sure that we provide that insight, but also that we can influence and we can impact. because else it's worth nothing. Like, and Robert will talk a little bit about that as well. But if we don't provide insight, it's worth nothing. We can be drowning in our data, but if there's no insight, it's worth nothing for us, right? So how does that look? And if we look at this from this triangle, then where we start is that we start to collect the data. We have some raw data. Then basically what we're doing today, what everyone is doing today, is that we're providing information or data information. We're basically summarizing the data, providing some structures to the data, and report that stuff. And then we report and we do our simple analysis, showing the variance compared to our budget or the forecast or same quarter last year, stuff like that. But that's really where we structure, and we might even be able to visualize the data here at this level. But where the finance business partner, those who's playing that role extremely good, what they're good at is that they're adding this knowledge component to it. They're adding the meaning. So now the information is becoming meaningful. And that's where the best finance business partners are sitting today. But if we want to take it all the way up to the analytics business partner and using data analytics, then we want to make sure that we provide intelligence. And intelligence is actionable analytics insight. It's something that is found from analytics. It's not something that is found from gut feeling, single case example, simple looking at trends and stuff like that. It's found from deep analytics, often using big data analytics, or could be predictor analytics, or could be when you're modeling Monte Carlo simulation, stuff like that. But make sure that we have that action, and the action is leading to a decision making in the business. And this is basically where the Finance Analytics Institute is having its focus. That is to make sure that we can take everyone to the next level of getting above this knowledge, but get into that analytics intelligence that the business will use to take data-driven decisions. And it's not easy to get there. But if you think about this from the evolution of analytics, how do we then move up there? Then again, I'm going with this timeline and looking at an evolution. And analytics is definitely here to stay because a lot of things has happened over the years in analytics. So if we go back to the 80s, standard reporting, what happened? Sales was down 5%. When we get into the 90s, we get some new tools to play with here. Excel was in the 80s, that was launched in the 80s, right? Now we get pivot tables. Now we can start to drill in there to answer that. Why did it happen? The visualization tools that is kind of some of the oldest came at that time. If you think about Click, came around 93, Tableau around 2000, stuff like that. And now we can start to visualize it. I'll bet you with everyone, we're not going to do a survey here, but I'll bet you that most of the people on this call might not even be in visualization tools today. Might still be in just Excel and the pivot tables, and that is kind of our analytics engine. But a lot of things has happened since then. When we're moving into the 2000s, then we start to talk about statistics and correlations. I started my finance career in 2005, and I very quick experienced, after I've studied at the university for 5 years and taking a ton of statistical classes, economy, and all these kind of things, that the stuff that I was doing in my role did not have anything to do with what I've actually learned at university, because some of the stuff that I could do was around statistics and correlations and cluster analysis and these kind of things, but I was not using them. So I went back kind of in like after a few years in that role and said, okay, what can I use here that is relevant? And some of the things that I found as well was regression, how to use regression and finding underlying assets in the business. So right now I cannot just tell why it happened, find that correlation. Maybe we figure out in the 2000 that your sales is highly correlated to your customer satisfaction. Remember, customer satisfaction is not financial data. It's data that's sitting out there in your ops or marketing department. But if you get that in and can find that correlation, then you can do some of the things that we're looking at in the 2000, explain that why. What is driving your sales up is really customer satisfaction, because you found a correlation there. But then when you get into the 2010s, we're trying to look at, okay, now it's fine that you can say what is driving my sales, but based on that, what would you expect it to look like? That is where we get predictive analytics, smoothing technique, regression, whatever it is, all these techniques around predicting the future. So now it's no longer that sales was down what was in the beginning. Like we could say that in the 80s, it's down 5%. We could dive into our pivot tables in the 90s and say, okay, it's related to maybe the EMEA region. And then we figure out in the EMEA region, the reason why it was down is because our customer satisfaction was down. And now, knowing that customer satisfaction, we can use our predictive models to say what will happen in the future as well. But what is really big right now is big data analytics. We have so much data, and all of you are sitting with millions of observations. And we can only scratch the surface in Excel because we don't have big data analytics tools to help us. And we can't do those simulations. With that, that's how we can talk about this, how to make it happen. And Robert will talk much more about that later on. So really the journey here, we go from this reporting to analyzing, and now we start to identify patterns here, or identify that there's a correlation, these kind of things, and then moving into prediction. But what we want to do right now is that we want to optimize the business. It's no longer sufficient just to identify and predict. We also want to have that strategic impact, which we get when we're optimizing. And this is basically from an analytics perspective, when we talk analytics, down here in the 90s, that's basically what we call descriptive analytics. Moving up to diagnostic analytics, that's basically elements around this why and to identify things. That's kind of like you're going to have a patient, right? And that patient is sick, and you're going to figure out what is wrong with that person. You're going to get that diagnosis. That's what we're trying to figure out in our data. Then we move up to predictive analytics, and then all the way up to prescriptive analytics. And basically what we're doing is that we're moving from hindsight information into that insight, and some of the new stuff that we're talking about, which is not a part of the 3 I's, that's foresight. Can we tell the business something about what will happen in the future? Then we can start to optimize the business. And remember, foresight is nothing to do with a forecast unless your forecast is based on analytics. Like rolling up a forecast, are you coming up with a biased forecast? That is nothing to do with analytics. So it's not even in the analytics journey. That is a part of your reporting, sitting down there in the 80s. Like just providing a forecast. But if we go in and we use predictive analytics to do a forecast, okay, now we start to talk. Now we're using analytics, and then we're in this evolution of analytics. Again, I'll bet you that if we took the survey here, the majority, and that's what we see in all the research that we're doing, the majority is sitting back in the 80s or 90s using those tools and those techniques to do finance. And that's a challenge. We need to get away from there, and we need to build and get those new tools involved in this, like make sure you get the statistical tools and the AI-enabled analytics tools that Robert will talk about as well. So this is how we move from this trusted scorekeeper up to the analytics business partner. And basically, you need to have these 3 components in order to do it, because you can have the best analytics, but if you can't communicate it, it's worth nothing, right? And if it's not strategically relevant, it's worth nothing. So make sure that you think about all the 3 components here, these building blocks, when you are doing analytics. You can't just hire the data scientist and expect that you can get there. Like you need that full spectrum of the right people, the right process, the right mindset, and the right systems to do this. So let's go back just a little bit around some research that we've done. So the analytics business partner here. So this one is some research that we have done from a paper that will be released in January, so a month from now. That is called the Temperature of Finance. We do that every year, so you'll be able to find the Temperature of Finance 2020 out there on our LinkedIn page. I'll give you a link to that one later on. But the new one here, I'll just share some research. You're actually the first who will see some of this research, besides from Robert and I, of course, but you'll be the first one who see this. But if you think about these 3 components, then if we only have the strategic leadership and the partnering skills, then we will lack that insight, because the insight is generated from our Analytics Toolbox. On the other side, if we only have the strategic leadership and the Analytics Toolbox, we're lacking that ability to tell the relevant story here to the business, because that's a part of our partnering skills. And that is a part of that finance business part that we normally talk about today. And then finally, if we only have the partnering skills and the Analytics Toolbox, then we will lack that strategic impact, because we might be able to find something, but it might be strategic irrelevant what we're finding. So what do we think? Where is it that we're best here? So our research, where we send this out to hundreds, like we get hundreds and hundreds of responses here on our survey. And we're evaluating this from a 1 to 100. the analytics business partner belong in here in the middle. But what is showing that is that where we're strong, so out of 0 to 100, where I would say if we go with the standard scale from a university or college, then 65 is kind of pass grade. That's where we're passing in the capabilities. You can see we're pretty close at passing as a partnering with a partnering skill. That what I'll call the traditional finance business partner. A little below here on that passing grade of 65 as with strategic leadership, but where we're way behind is on the analytics toolbox. We don't have the techniques, and we don't have the tools. And without the techniques and the tools, you can't get there. If you only have the partnering skills and the strategic leadership, you can't get there. So you want to make sure that you build that analytics toolbox, and Robert is going to talk much more about that. And overall, the score that we gave here is 49. That is the average of these 4 components. So we're not passing as an analytics business partner. We're close to pass as a finance business partner with 63, but we really need to take this into the next level. And if we look at the analytics toolbox with the tools and techniques, this is what it's showing. That we have improved a little bit from 2000, which is good, to 2020 to 2021, which is a good thing, but it's really small improvements. And there's a long way to get up to that 65, the passing grade of a D. Right now we're sitting on a really strong F, which is what we need to look into. So if you want to become an analytics business partner, you need to think about that tools and the techniques as well. You cannot just do it with your Excel and do your analysis in Excel and be able to tell the business what is the variance to last year and stuff like that. You really need to build this analytics toolbox into your business partnering approach. So Mohammed, that's what I have. Anything that is coming in on questions or comments?
Yeah, thank you, Jasper, for the very informative and interesting part. I received 2 questions up till now. The first one is saying that business is more keen to invest in customer-facing investment. So how can we convince our business partners and our business owners to invest in digital investment, and how can we calculate the ROI for digital investment in digital finance?
Yeah, so I know Robert will talk much more about that, but basically the first one, how can we convince them? It's a proof of concept. First of all, you need to show them something with what is available today and what you have available today that you can give them and say, okay, this will influence. In my case, what I talked about, that study around predictive analytics that we did, that one didn't come with a huge investment. That one was stuff that we could basically find that was available for free. But there is a lot of companies out there, and I'm sure that Robert will say that, like, proof of concept, that's really where it starts, and that's where we start to work with clients. That is to say, okay, we'll do a proof of concept. We're coming in and helping you. You're not going to pay for anything in the beginning here. You can see what we can find in your data, and if you like it, then of course we can go on that journey with you. But from a proof of concept perspective, that's kind of where everything starts, making sure that there is value, and they can see that with their own data that there's a ton of value in it.
Great. And I received another question which is saying, can you please name top 5 companies in the world who apply the building blocks analytics business partnership, and have they extremely succeeded in the last 3 years?
So I'm not sure that I want to name any companies. We of course have our proprietary data where we can see who some of those guys are. The thing that I will say is that there's no pattern in what kind of industry that they work in, what kind of region that they are in, what kind of and what kind of size that they have. There's no patterns in whether you are able to play that role as a analytics business partner. It doesn't matter about industry, size, and the region. What really there might be a little bit that it's difficult for startup companies to get there, because they're normally focused on some other things. The finance department in the startup company is often focused on other things. But I can tell you that it's not that you're saying, okay, if I get into a pharma company, then they're significant better. That's not the case. And it's not that if you're getting into an IT company, they're significant better. That's also not the case. It's across everything. It's across regions, across size of companies.
Thank you, Jasper. The last question is, you mentioned that Tableau is one of the visualization tool. Which one you prefer, Power BI or Tableau, and why?
If we only taking the two of them, then I would say anytime Power BI, but I'm not an advocate for Power BI, but I'll just say anytime Power BI because it's free and everyone can get started there. So you shouldn't have, like, you don't have any excuse and say, okay, I can't get into visualization because it's free, it's out there. If I should advocate for one, there might be Oracle Analytics, but that's another story.
Okay, another question, because some people are confusing about analysis and analytics. Can you precisely tell us what is the difference between analytics and analysis?
Yeah, so analytics, with the definition, is where you find that insight that leads to a decision. So you need to think about, ask yourself when you're doing something that you might be called analytics, and a lot of people is calling things analytics today that is not analytics. What kind of decision can the business take from that? If they can take a decision from it, is based on analytics. And the decision is not that you're saying that the sales is down 5% and it's related to this customer. It's to tell that why. Why is it that this customer is down and not everyone else? If you can find that, then you have found that with analytics. But just telling that this customer is down, drilling into pivot tables, that's not analytics. That's just analysis.
Thank you, Jesper. That's all as a question we have, and we can move to the next part.
Okay, thank you.
Thank you, Jesper.
Let me stop sharing here, and then Robert should be on.
Okay, thank you very much, Jesper and Mohammed. Now we have the last session with Robert that's focused on the emerging and digital technology. So Robert, can you take from here?
Yes, I can. Thank you very much. Great to have you all here and great to be here. So let's talk about making finance agile with emerging technologies. So I like to start with a little humor. The man behind the desk I call Bobby in the basement, and his boss, Mr. Big, comes in and says, looks like you've got all the data. What's the holdup? The holdup is without analytics, data is just numbers. And that's where we are today, largely in finance. We're drowning in data, but starving for insights. And we've been talking about insights all morning. But what is insights? Insights are unseen patterns and unbiased predictions gained from applying AI-enabled analytics on data that change decisions and lead to improved business performance. Tagging on what Jesper said earlier, when we talk about the difference between analytics and insights, analytics uses mathematics, right? Like correlations, Monte Carlo analysis, exponential smoothing. Those are mathematics. Variance analysis, adding, subtracting, multiplying, dividing, those are arithmetic. So when we talk about insights, we are looking for the unbiased predictions from mathematics and the unseen patterns in the data. So you can't get insights without AI-enabled analytics. And 60, or I'd say almost 2/3, 66% of finance departments use Excel as their primary reporting and forecasting and budgeting and planning tool. And this is one graph from hundreds and hundreds that are out there that really say that in finance, we're suffering from what I call Excel suffocation, because 70% of the time is spent on data compilation, synchronization, integration. In other words, we're not doing AI-enabled analytics. We're not using mathematics. And this is an outcome because we are essentially in one tool. And that tool is not allowing us to get to the insights that we need. So let's talk about this. Jesper has shown this, this graph before. And so when we talk about what happened and where it happened, we go back to the 80s and 90s, and we were using Excel and business intelligence. Then when we get to the 90s and the early 2000s, we get into why it happened. And we're starting to now use visualization tools and budgeting tools. But to get into the questions of what might happen and how do we make it happen, now we need to engage AI-enabled analytic tools. So this is our Agile Finance Toolbox. Notice, it's not one tool. And Excel is part and parcel of our toolbox. So Excel, business intelligence, data visualization, and AI-enabled analytic tools are all part of the toolbox we need in order to get from the finance business partner to the analytics business partner. And that's where we go from the hindsight to the insight and the foresight. Now, we're largely trapped here today, as Jesper was just mentioning. And part and parcel of that is our tools and techniques. We're largely and primarily in an Excel-driven world. And from the research work that we did at the Finance Analytics Institute, we can tell you that about on average, 42% of our time is spent in data capture, 24% of our time is in just basic standard reporting, 21% of the time is in the descriptive analysis of where did it happen. But we're only spending about 5% of our time in diagnostic analysis. So this is basically consuming 92% of our time in finance. And where we really need to be is here in producing insights and foresights. So we need to be really spending 50% of our time from the diagnostic to the prescriptive and the predictive analytics. In other words, we want to advance from making reactive decisions, in other words, waiting for the future to get here and then we react, to proactive decisions where we start doing better planning and optimization so we plan to how to make the future happen. So what's holding up Agile finance? First thing is we have to get rid of the 92% of the time that we're spending today. We've got to get rid of about half of it so we can spend our time in analytics. And so the first thing we have to do is eliminate little used, not used, and minimal value reports. Let me give you a perfect example of this. A major consumer credit company had 1,300 reports that finance produced. They simply went to their users and they asked them, what reports are you using? And just from that simple question, they eliminated 700 out of 1,300 reports, and that eliminated 400 hours of report production. It freed an enormous amount of time for their bandwidth. The second thing in order to pick up bandwidth is to use our BI tools, use our visualization tools, our budgeting tools, and our analytic tools in order to automate standard reports. Now, a lot of times I hear, Robert, I can't just put them in my BI tool, or I can't just put them in my analytic tool, because I have to pull them out of the transactional system, then I have to do some scrubbing before I can actually use them. So my answer is fix the data. That's what has to happen, is if you have bad data, fix bad data. If you have inconsistent data, make the data consistent. Work with IT, work with the business users, but get the data aligned so you can automate your reports. And finally, once we've done the elimination, once we've done the automation, and we've freed hundreds and hundreds of hours so that we can start using analytic tools and techniques, we can start taking that data and using it not just to automate the reporting that we have, but once the data is in our AI-enabled tools, then we'll be able to probe with deeper insights to make different decisions and plan how we want the future to happen instead of reacting to the future as it gets here. So when we go back to our 5 key questions of what happened, where it happened, why it happened, what will happen, and how to make it happen, we have a toolbox. And so what happened and where it happened can largely be answered today, as we do now in our Excel and our business intelligence tools. When we want to get into why it happened, we really need to start thinking about more like visualization. But we normally can't get all the way there. For example, the sales department misses its quarterly sales, so finance calls up the sales vice president and says, why did we miss sales? And the sales manager says, oh, 3 deals slipped. Well, that's not why it happened. That's a reason that the salesman gave. Was it because of customer satisfaction? Was it because we lost a salesman? Was there a correlation of a leading indicator that could have told us that some of these sales will slip? So we don't really know why it happened. We need now, in order to really get into why it happened and predict what will happen and better plan and forecast and optimize to learn how to make it happen, here's where we have to get into our AI-enabled tools. So this is the Analytics Toolbox for the Agile Finance Group. Now, I also want to touch upon very briefly, we talked earlier about people. Who are the types of people that we need? Well, today we have largely very clever people who know how to use Excel. And what they are is clever in using a tool. What we need in order to do why it happened, what will happen, and how to make it happen. In other words, what we really need to gain insights is curious people. So curious people are not focused on how do I make a tool do something. They're really focused on the data, and they're curious about how to find the unknown patterns and the insights that are in that data. And let me just talk quickly about a few other things. Robotic process automation. I'm sure you've all heard that, RPA. This is not analytics. It's just a way of automating routine functions like AR and AP. It's very good. You should do it because it helps us automate. Desktop statistical tools don't have a lot of value because they're largely Excel bolt-ons. And you really have to understand statistics in order to use them. But they do have the value of being inexpensive, of being cheap. So it's something that we can use quickly and to find things that may be very small and very fast and get to a solution there. The next one is enterprise data mining tools. These are like SAS. These are very big. These are very complex. These are very expensive. These are where you need PhD statisticians to help you. So these are not things that we would use in finance. And finally, analytic platforms. There are analytic platforms that like you'll have on Microsoft Azure or AWS. These are very nice and they're very good to help you solve specific problems that you may be tackling. Like, for example, if you're a distribution company, route optimization. But they do require expertise. They require application designers, they require consultants, they require data scientists. So they're large, they're expensive, and they're more suited for large companies looking for specific solutions. So in summary, digital transformation needs a toolbox beyond Excel. Eliminate unused and minimally used reports to gain bandwidth. Use your BI, your visualization, your analytics tools to automate your standard reporting. And when the data's in there, you'll be able to elevate them and find insights in that very data that you heretofore were unseen. You'll be able to find unknown risks and unseen opportunities. And finally, Agile Finance needs AI-enabled analytic tools for that deep insight if it wants to be the strategic leader, part of that strategic leadership team, and become that analytics business partner. So with that, I'll turn it over to questions.
Yeah, thank you very much, Robert, for such insightful ideas and presentation on the use of technology. I think one question we have from Venkitesh, as you mentioned, AI-enabled analytics. So can you please give examples of business case or success story where this was deployed and resulted in revenue or margin improvements?
Sure. How much time do we have? I can take the rest of the day.
We have, I think, last 15 minutes. We can say.
I'll be kind. So a perfect example is we can use AI to actually predict trends and get signals ahead of trends. So right now we have variance analysis that tells us trends. And it says, okay, well, these trends are down year over year, and these trends are up year over year. So the trends that are up year over year, we ignore, nothing's broken. The trends that are down year over year, we have to fix. And for one $400 million CPG manufacturer, like most companies, this is how management reacts to the variance analysis trends. But what we did is, by applying this AI-enabled analytics, we could predict the future of the trend. And so we could see that here were trends that were actually down, but were predicted to get better. So instead of spending time fixing those trends were already on the mend. Don't waste your time on those trends. Other trends were good trends, trends that were ignored because they were good and they weren't broken. We can, if we found the ones, which we did, good trends predicted to get better, that actually led us to pricing opportunities. We can actually find the individual distributors and the individual products that we can go back to and say, here you have pricing power with these products at these stores. Another thing, another prediction were, and this is very important, the good trends that could go bad, because those are completely invisible. We don't see good trends that go bad until they go bad, and then it's too late. Again, using AI-enabled analytics to be able to predict the good trends that could go bad, and that was an enormous way to stop the horse leaving the barn before, in other words, close the barn door before the horse leaves the barn. That was an enormous saving. So in this $400 million manufacturer, the difference was, without knowing this, they would have lost $7 million in sales. By knowing this, they actually improved sales by $27 million. And that's just one example of dozens and dozens of using AI-enabled analytics to gain insights to better make decisions.
Okay, and there is one more question. Can you give any specific examples of AI softwares, artificial intelligence-based softwares?
Sure. Aurora Lights. I think that's the best artificial intelligence software I know. But you have, there's a number of vendors out there. You'll have people like Big ML, you'll have Alteryx, you'll have Datamir, that all have, are all AI-enabled platforms. Aurora has its advantages in that we were specifically designed for finance. That's where we started. So I think we have a strength in that area. And we also are designed for the FP&A analysts. So those are the kinds of things that I think give us an advantage. But if you're like, if you want to get very deeply involved in, let's say, like marketing analytics, web marketing analytics, something like a Big ML is going to be a good platform for that. So those are just some of the examples. By the way, I want to mention something that Jesper said earlier, which was typically all modern analytic suppliers, vendors today, provide proof of concepts, and they're free. And so you can prove the value of AI-enabled analytics by doing the proof of concept with the modern analytics tools.
Okay, that's all. I think there are some questions from the audience regarding their professional certificate for finance transformation. So I think Steve, I will over to you now, and he will explain further about the finance transformation certificate program as well. Steve, over to you now.
Great, thanks, Zishan. Yeah, this is perfect timing. So we're just getting near the end of the webinar, and really fun to listen to both Jesper and Robert talk about their deep knowledge of this analytics. I get excited listening to them, so that was really fun. CFO.University is thrilled to be teaming up with Hoff Community and the Finance Analytics Institute to deliver the Finance Transformation Data Analytics Certificate Program. So voila, Brian Kalish, thanks for asking the question, but there is a certification program coming your way. The program will specifically develop for finance professionals, and you just received a small morsel of what you'll learn from the course during the last hour and 15 minutes. The virtual program will be run on Saturdays starting March 6th for 16 weeks. We'll take a deep dive into these topics that we covered today. You know, each Saturday session is expected to last 60 to 90 minutes, and so that's a fun start. Robert and Jesper and I will deliver the course material. We'll share the classroom with global finance leaders who are at the front of the pack in the transformation of our profession and the adoption of data analytics as a key tool in our toolbox. Zishad and Mohammed will moderate the courses, making certain certificate candidates get the most out of the programs. The virtual program includes 4 modules. Module 1 will cover how to overcome the challenges finance transformation faces, how to move from a scorekeeper to a strategic partner, the roles and objectives of finance value chain, and the impact of disruptive factors are having on business environment. Module 2 will discuss business partnering in challenging times and what analytics business partner looks like. You'll do some benchmarking, hold a workshop, and learn the fundamentals of storytelling with analytics. The third module will dive into the analytics through the eyes of the Chief Financial Officer, how to eliminate and automate, where to start an analytics project, and finish the module on an unbiased forecasting and budgeting. Module 4 looks at the system side of analytics. You'll cover artificial intelligence and machine learning, some of those things that Robert just talked about, and how to apply AI-enabled analytics to your business. You'll finish the module with a case study. So we'll be sending you details for the course, and if you aren't able to make it, we would sure appreciate it if you would send a colleague or pass the details on to friends who know data analytics will be playing a key role in their finance transformation. We have a few minutes to take any final questions you have on the webinar or the Finance Transformation Data Analytics Certificate Program coming up in March.
Yeah, Steve, there is one more question relating to the presentation. My question is more relevant to U.A.E. I have upskilled myself with the technical aspects of most of these tools in like RPA, AI. However, I'm yet to see one company which recruits through their finance teams based on these skill set.
Yeah, and I think that's what's happening is this is a growing field. And Jesper, when you saw he did the chart where it showed how little on the analytics side, we're focused on, but I think that it's rapidly changing. I mean, this topic has become front and center for CFOs, who are on the leading edge, not only in the States, but over there, all over the place. So I think that will be changing. And I think you can be proud to put the data analytics background on your resume. I think it's become hugely valuable.
Yeah, there is no doubt in it. And yeah, I think this is, as Steve mentioned, this is really a unique blend of modules that is available anywhere. It's not available anywhere else. We have specifically designed this by partnering with our strategic partners, Aurora Predictions, Finance Analytics Institute, and CFO.University. And if you really want to start the transformation journey and make 2021 as your year of transformation for your finance career, or if you want to transform your finance function during this year, we highly recommend you to enroll in this course. There are lots of, it's completely from the practical point of view. We are not going to share any theoretical knowledge or any theoretical background. It's all based on the practical experience of our speakers who have implementation experience. So if you have interest, or if you would like your team or team members to enroll in this program, we have special discounts as well for the up till year end, and it's there also available flexible payment options. So if you would like to invest, don't consider it as your spending, rather it will be your investment on your talent to get the return on your investment to meet the changing business needs and requirements in the market. So I think that's all from our side. And I can see there are, what's the cost of this certification? We will share the link and the complete brochure, so you can just have a look at it, the complete cost and everything will mention there. And there are some special discounts as well. So you can just go to the website of HOFT under the training and coaching programs available right now. The sign up page is there. So you can go and take all the details from there. And we are offering a special discount up till 31st December. So you can avail it, or you can have a flexible payment options as well. And for any further details, you can just send us email at info@hoft-global.com or to CFO University, and we will be glad to assist you further. So I think that's all with it. Thank you very much, all the audience, as well as all the speakers, especially Jasper, Steve, Robert, and Mohammed for moderating the session. And we hope we get lots of ideas during this webinar, and we would like to collaborate further in upcoming sessions as well. So thank you very much, everyone. Take care.
It's a pleasure to be here.
Thank you. It was a pleasure. Thank you.
Cheers all.